Well, I'm Jagender Rana, and the topic for the discussion today is why do Indians ignore insurance? Why do Indians ignore insurance? See, Indian culture is rich in a lot of things, but financial consciousness is not one of them. Children and young adults are educated in social do's and don'ts, but not in matters of financial planning. All of us have seen examples around us when risk planning is discussed on the hindsight. But when life is running smoothly, we believe this party is going to last forever. And so we never plan for bad times. We believe that our health is abundant and here to stay forever. But then we realize it's not the case. It is not until we see a family ruined by the passing of a breadwinner and we put our responsibilities in perspective and plan for a term or life cover. But the sad truth is that not every person gets that timely wake up call, that firm nudge in the right direction. So even when we buy an insurance policy, we only spend as much as the others do, or sometimes even lesser. All the while viewing insurance as an expense and not as the only dependable assets in that time of utmost needs. As far as affordability of insurance is concerned, insurance costs money and many people cannot afford to buy sufficient cover. However, things are changing now with a lot of insurance plans available online. People can choose what suits their needs. And one prominent reason is poor marketing of insurance. Insurance is an intangible product. It is promise that the insurance provider will provide compensation if a loss occurs. And selling a promise is no mean feat. Most people don't read the policy document or don't understand what they read in it. So they rely on what is advertised about the product. But advertisements are marketing campaigns conducted by insurance sellers, often adopt narratives and mislead customers. So they provide incomplete or incorrect information to the customers, leaving them at the risk of being inadequately insured. So apart from this, people in the rural and semi-urban parts of India still rely on age-old investments, tools such as gold, cash deposits, etc. They believe that if ever a loss occurs, they can use financial borrowing methods to make good the loss rather than spend on insurance where they feel that there is an expenditure even without the occurrence of loss. However, what they fail to realize is that the loss amount coupled with the cost of borrowing could be very huge, whereas the premium for an insurance policy is a bigger amount. So in comparison, such awareness and education need to form the basis of marketing insurance products so that people in every part of the country understand the importance of insurance. Lack of clarity regarding returns of the policy is another misconception about the insurance. Because many understand the need for insurance but still look at it primarily as a money-making investment option, if not tax saving. So they feel that they are compensated only if the policy offers returns. But insurance is not an investment tool and should not be treated as one. These looking for insurance product that provide investment options need to understand that such products may provide neither good investment returns nor adequate insurance protection. And so it is important for the buyers to educate themselves and take such mixed instruments only over and above a core health or life term plan. So insurance is a safe and reliable tool to manage unexpected financial loss in life, which in most cases tend to be huge amounts. However, looking at insurance as only a recurring expense or a tool that can provide return is diluting the purpose of insurance. And so it is important to understand how essential insurance is for you. While making choices regarding your insurance or insurance linked product, your priority should be to secure sufficient risk cover, and everything else can be an add on. Otherwise, you run the risk of being left with only cream and no cake. So in India, a lot of people avoid buying an insurance policy, mainly because either they don't understand the importance of insurance or they believe it is an unnecessary expense. So as compared to the countries in the West, insurance is still a growing industry in India. Over the years, the number of people buying a life insurance cover has increased significantly, but still a large number have no insurance protection. People in India avoid buying life insurance cover either because they have a misconception about the difference insurance products in the market or they believe it is expensive. So listed below are a few common reasons why people in India don't buy life insurance. So for example, ignorant about the financial risk. In India, people prefer to stay in denial, thinking that nothing will happen to me, and hence they prefer to stay self-insured rather than buying an insurance policy to get protection against the risk. Also, a vast portion of the population in India have minimal or zero knowledge about the financial risks of not having sufficient insurance coverage. Then there is no understanding of insurance products. Today, the insurance companies in India offer different types of insurance products to suit the varying needs of customers. However, the availability of different options often confuse the customers, and it makes it difficult for them to choose the right plan to suit their needs. There are some plans which protect against emergencies, and there are other plans like the Unit Linked Insurance plans, which provides the dual benefits of protection and opportunity to invest in the money market. So based on your personal choice and the coverage you need, you can choose the right policy. Then insurance provided by the employer. This is one of the most common reasons why people in India avoid buying a life insurance policy. Many organizations in India provide an insurance cover for their employees. However, you must know that the insurance offered by an employee provides only basic benefits, and it may not be enough to suit your needs. Also, the insurance provided by the employee may not cover all your family members. So to ensure full protection to your family, it is important that you buy a personal insurance cover even if the employer covers you. A lot of people in India put off buying life insurance because they believe that they are young and healthy and they don't need insurance. If you do think this, you must know that while you are young and healthy, it is the best time to buy insurance as you can get the insurance at a lower premium rate. If you delay buying insurance until old age, you would have to pay a higher premium. And the procrastination is the most important cause of ignoring the insurance. Because in India, having life insurance is not mandatory. Also, there is no law regarding the right age to buy an insurance cover. People don't consider protection a priority and tend to believe that they can buy it later. But research suggests that 4 out of 10 households where the family is dependent on a single earning members face difficulty to meet the household expenses in case of the breadwinner's death. If you put up buying insurance now, in case any eventuality or unexpected and untimely demise, it can cause financial hardship to your family. Another common reason why people in India avoid buying life insurance is that they believe it is expensive. However, the truth is that it is quite affordable for all. You can buy a term life insurance policy for a premium of as low as rupees 500 rupees per month and get protection up to rupees 5 lakh. So, the insurance legislative framework in India is designed by the Ministry of Finance in consultation with the IRDAI and other stakeholders in the industry. So they have recently proposed an amendment bill, and they have planned certain things in that bill. A brief summary of the key changes proposed under the draft bill are like this. One is increase of FDI limit. The draft bill proposes to insert 3AA in the Insurance Act to allow up to 100% foreign investment in an Indian insurance company, subject to any conditions imposed, and up to 26% foreign investment in an insurance cooperative society. So the central government for the IRDAI is expected to issue operational guidelines and amend existing norms on foreign investments, which will likely shape the actual impact on the entry of the new players into the Indian insurance market. Then increase the scope of business. The draft will seek to expand the existing scope of business undertaken by Indian insurance companies. Like the IRDAI may grant a certificate of registration for class or classes of insurance business, thereby potentially allowing an applicant to seek a certificate of registration for multiple classes of insurance business. In this regard, the draft bill for the first time proposes to define the term class or classes of business as the class of life, general health or insurance or any other class notified by the central government. How the draft will clarify that an entity established, incorporated or corporated under laws of the country, any country outside India, is only permitted to carry out insurance business. So while the erstwhile bill expressly exposed to allow applicants to seek certificate of registration for a specific subclasses of insurance business, the draft bill is unclear on whether an insurance company may potentially be established to carry out monoline insurance business or implement a business plan focused solely on a particular line. Other businesses. So while presently insurers are only permitted to carry on insurance business in accordance with their registration with the IRDAI, the draft bill proposes to allow an Indian insurance company to undertake other specific forms of business. In this regard, the draft bill provides that an insurance company may engage in one or more of the forms of business, that is life, health and non-life, and differential capitals is also one of the most important suggestions. In that case, there are certain other provisions related to the prohibition on common directors, amalgamation with non-insurers and insurance agents for multiple insurers, for mutual license, for insurance intermediaries, increased power and penalties, like that. So the draft bill, with its focus on strengthening regulatory oversight, promoting competition, and enhancing policyholder protection, is expected to reshape the dynamics within the present Indian insurance market. The changes are primarily aimed at achieving the overarching goal of insurance for all by 2047, facilitating the entry of the new players in the Indian insurance sector by allowing 100% FDI in Indian insurance companies, 26% of FDI in insurance cooperative societies, expanding the scope of businesses to be undertaken by insurance companies, introducing different capital requirements for insurance companies, and one-time registration of insurance intermediaries. So if implementation is proposed, the impact is likely to be wide-ranging. Thank you. Thank you very much.